right, good evening, everybody. Today is, I don't even know what day it is. It is April 6th, 2023. It's about 8:37 p.m. Welcome to Miami. For many of you, this is the first time you tuning into a Miami, Florida live stream. But before we start, I just want to say that it is probably going to be a very, very short stream tonight. I do have to be up very early. I'm going to be traveling to Fort Lauderdale tomorrow. I got to be there at 8 o'clock in the morning. So it's going to be probably about a 20 to 30 minute live stream. I know, I apologize for that. But there's a lot to talk about. A lot of movements going on in the market. I would like to note, we are going to be doing a dedicated stream to the Institute for Supply Management PMI numbers, okay? So for those of you who want to review that material on your own, just go to the Institute for Supply Management's website and you'll be able to see the PMIs. And a lot of the numbers, well, the numbers came in, it was quite disturbing, some of the report, but we'll talk about that a little bit later. Breaking news in the housing market, the FHA, I'm not sure if you guys heard the news, but the FHA did just approve, or they greenlit, a 40-year mortgage. So there's a lot of controversy and a lot of, I would say, mixed messaging about that. In my view, it's actually a negative. I think the U.S. government doesn't really understand how to make home ownership a little bit more affordable for the average American. But we'll talk about that. You know, and I think the reason why it's so significant is because we've been talking about how we've been having a really big problem with supply in the market, or lack thereof, across the entire United States. And that's pretty much a major reason why prices are elevated, right? Many other different reasons as well. This is the Metro Mover going by. But instead of, you know, maybe providing some different incentives to builders to work together to put more supply onto the market, even in major cities, you know, working together to do a lot of these conversions from a lot of commercial space to residential space, right, to maybe bring about more supply in the market so prices come down. Instead, it seems, you know, we always turn to debt as the solution to our problems, which is definitely not. Let me put on my backpack for a moment. It's not going to make homeownership more affordable. If anything, it's going to make it much, much more expensive. Give me a moment here, 1 second. It's going to be a little bit windy because I do not have the microphone. I was running around like crazy today. So apologize for the wind noise in advance, but we'll talk about that. We're also going to talk about gold tonight. Gold is over 2,000 yet again, and there could be a significant move in gold we'll talk about, and then we'll also talk about interest rates. But first, let's say hello to everybody in the chat. I see Julia M, Austin City Limits, Gigi NYC, Hawaii is here. Hey, Abdullah, what's up? Good to see you, Abdullah. Richard Vogel, Peter Webley, thank you so much. Martin is here. Welcome, Martin. Thanks so much. Cindy Foley, Ryan Beck, good to see you, sir. That's going to be the brand new space right outside the 200 Southeast Financial Center. I forgot I didn't have the mic there for a moment, but this is going to be, I think, over 20,000 square feet, probably more than that, of open space for a lot of the office workers here. Now, there used to be a WeWork office right here in the 200 Southeast Financial Center where you guys have been in multiple times, but I think they closed it down. I tried to make a reservation there, but I believe Citadel Securities, as you all know, Citadel is one of the most prestigious and successful hedge funds that originally was based in Illinois, like Chicago, Illinois. They have since moved down and relocated to Miami, Florida, and I think they bought the entire 20th floor. So there's no more WeWork there, so I have to figure out what I'm gonna do. Hey, Steph UH is here. Good to see you, Steph. Welcome. Justin S. is a lot less people than New York City. Yes and no. Miami is a different city. Chances are if you live in Miami, and I would say the neighborhoods surrounding it, I was about to say boroughs, but everybody has a car here, right? Literally everybody. If you live in Miami, you either have one of these Vespas or you have a car. So it's not, you very, very seldom will you see a lot of street traffic, or I should say foot traffic, right? As we head over into Brickell, which is the main, sort of the main area, they call it Little Manhattan or Mini Manhattan. That's where you'll see the majority of the people. But besides that, everybody drives, right? We do not have a robust public transportation system like you have in New York City. So a lot of people, if you're gonna move here, a lot of people drive. Lena Sandoval's here, Anthony 25, Robert is here, Evan Weeks, good to see you. Thanks so much for joining. Well, I think the biggest piece of news that I think is going to impact the housing market quite significantly, there's the Whole Foods here, is the FHA and their approval of the 40-year mortgage. Now, I have a couple issues with this because, yet again, in my view, and again, you know, a lot of people disagree, and that's fine, but I think this is just another way for the government to really put a band-aid on the problem as opposed to finding a permanent solution. So what do I mean by that as we're waiting outside the Whole Foods to cross the street? Well, what I mean is this. There's a major problem of affordability or homeownership affordability in the United States. And it's really been exacerbated by the pandemic and artificially suppressed interest rates over the course of the last decade. So when you have artificially suppressed rates, it tends to create asset bubbles, right? Because it gives off the appearance that people can afford things when in reality, the cost of money is just extremely cheap. There's the Metro Mover. So we know that as of right now, you know, there are prices across the United States in very select housing markets that prices are coming down, but not coming down nearly as fast to offset the increase in the cost of money. So what do I mean by that? Well, if you think about just a regular, I'll use Miami as an example because we're live streaming there. There were some 3-bedroom, 2-bathroom homes that you probably could have bought in, you know, maybe North Miami Beach before the pandemic for probably $250,000 to $270,000. Well, fast forward throughout the pandemic when a lot of Northerners and New Yorkers started moving down, well, they started to bid up the prices quite significantly. It's very difficult. This is the Epic Hotel and Residences. Real quick, I'll point out. It's very difficult to find a 3-bedroom, 2-bathroom house in any good neighborhood of Miami that's probably going to be less than, I don't know, I'd say $450. It's very difficult. So you have a lack of supply. You have many people moving to the southeast. So the problem is, well, how are we going to make homeownership more affordable? The government's solution to that is, well, let's just extend the time limit for people to be able to pay back their loans to the bank. Well, that's actually not helping people. That's actually making things more expensive. And if you understood how to read an amortization calculator, and this is very important. Real quick, this is the Aston Martin building. This is one of the most, I would say one of the most brand new, most luxurious buildings in all of downtown Miami. It's going to be complete later this year. It's an amazing building. But if you do the math, if you take out a $300,000 loan and pay it back over 30 years, and then do the math on a $300,000 loan paid back over 40 years, well, you're looking at significantly increased amount of interest you are going to be able to pay back. So many people, in my view, they don't understand, especially in the real estate business, they don't understand the term affordability, right? Can I afford it? Just because something is cheap doesn't necessarily mean it's a good deal or it's a good value or it's affordable, right? What this is unfortunately going to do, in my opinion, and I don't think 40-year mortgages, by the way, everybody, are the end. I think you're going to see 60-year and 100-year mortgages coming down the pike. What this is going to do is just going to make the big banks more money, right? It's going to increase the amount of people that are, in servitude of debt slavery in perpetuity, pretty much. And people will say, hey, look, your monthly payment's going to be $1,200. But what they won't tell you is, if you look at the amortization calculator, well, you're probably going to be paying almost the same amount that the home is worth in interest, which is pretty egregious. I don't know. What do you guys think? You guys think we're on our way to a 60-year or 100-year mortgage? And do you guys think extending the time frame of a mortgage is a good thing, or do you think it's a bad thing? Let me know in the comments. Let me read some of the comments here. Hey, LW Hunter says, that is what I was thinking, always slanted towards the banks. Yeah, it's exactly. It's just going to make the banks more powerful, and it's going to make them more money. The job of a bank, or one of the ways a bank makes money, is to lend out money and get interest payments. Steph UH says, I think the banks love it. They probably do. Hey, Vladimir says, hey, Tom, I just came back from Miami. It's an amazing city. I want to move there now to work. Oh, cool. In condo development. Hey, Vladimir, well, I'm glad that you enjoyed your stay here in Miami. I love it here. I own property here, and I'm very bullish on Miami. Soho says, Tom, how about 100-year mortgages? I think they're probably going to come down the pike. Ryan Beck says, I can't believe they passed that. Yeah, I just think the government doesn't really have a good grasp on solutions. What they want to do is just keep kicking the can down the road and putting a Band-Aid on things. Hey, Keith says, wow, a mortgage that becomes a legacy. Yeah. Evan Weeks says, holy crap, imagine the interest rate on a 100-year mortgage. And, that's the problem. Now, what would be more sustainable, in my view, is if we come together as a country, right? I think developers, wow, check out this boat that's going by. This thing is crazy. I think you need a collective of individuals and organizations to work together here to provide a solution. And one of the reasons why, again, we have this problem where homes are so expensive is because, number one, artificially suppressed rates, but number two, a lack of supply. We're still seeing a lack of supply. So I think we need to go back to basic economics 101 and say, if we were able to increase the supply, well, then if more supply is on the market, that will be able to, satiate all of the demand in the marketplace. And that means, 5 buyers won't have to be bidding on 2 houses, right? Maybe 5 buyers will be bidding on 5 individual different houses, right? So the problem isn't, extending the time of a mortgage to pay back the money. That's actually going to make the problem even worse, because, again, I'm not saying this is everybody, but there's a lot of real estate agents out there, there's a lot of mortgage bankers out there that fail to explain to their customers and their clients the amortization schedule and the amortization calculator. All they do is they try to sell the customer on the idea that, hey, you could afford this because look at your monthly payment. Just look at the monthly payment. If you could afford the monthly payment, that means it's a good deal. And that's the opposite way that you should actually look at real estate. You should look at real estate from a valuation standpoint, not if you could afford the monthly payment. Because even if you were going to buy, let's say, a $500,000 piece of real estate, single family home, duplex, triplex, if the monthly payment is $1,500, many bankers out there will try to sell it on the fact that, oh, this is in your price range, you could afford this. Okay, but how long is it going to take to pay that back? So if it takes you 100 years to pay that back, I mean, you're essentially paying almost double the amount of the house what it costs in interest, right? So you should always look at it from a valuation standpoint, not can I afford the monthly payment. That is totally the wrong way to look at it. And from my opinion, with the FHA approving this 40-year mortgage, that's exactly how they're thinking about it. You know, how do we allow more Americans to afford the monthly payment? They don't care about the valuation. They just want the appearance of being able to afford a home, right? But if you're paying hundreds of thousands of dollars in interest to the banks, well, how is that helping the average American consumer build equity in their homes and build wealth? You're essentially just going to be a debt slave for longer and longer periods of time. I don't know, it's kind of bizarre. I do disagree with that solution. I think it's more of a band-aid on the problem. But all right, everybody, this is the Miami River Walk. Right here, if we walk across this bridge, this will be into the Brickell section of Miami. These two big buildings here, well, technically three big buildings behind this tree here is the W Hotel and Tower. Really, really beautiful residences here. And if we look closely, sometimes we'll see some things jumping out of the water. Hey, Joan K is here. Good to see you, Joan. Thanks so much. Magnolia says, my mother showed me the amortization chart for her house. My grandfather paid it off in 3 payments. House is now double in value, and I learned then that the first of many payments is just paying interest. Yeah, so Magnolia Bell makes a very, very fantastic point. I think this is important for people to understand this, because many people don't. But first, guys, I gotta point out this construction site here. This is so interesting and so fascinating. You guys are gonna love this, okay? And I just found out about this maybe 2 or 3 weeks ago. What you're looking at right here is literally the oldest piece of historical artifacts in the United States that they just discovered right here. So there used to be, and I forget the name of the Native Americans, but these are the first, literally the first Americans, Native Americans that we have on record so far. And when they were excavating this big, I guess you can call it property site, construction site, they started to find all of the artifacts of these people that were here thousands and thousands and thousands of years ago. So if you just Google, if you go on YouTube or something like that and just Google historical site downtown Miami, I think it's going to be the first thing that pops up. And unfortunately, the developers are giving a lot of the archaeologists a hard time. I think that they should pause the project, make sure that they recover all of the artifacts and put it in a museum. I don't think they should go through with the development unless we get everything and preserve it. I mean, it's incredible. I was watching the video on YouTube, but it's unbelievable. So these are some of the first recorded Native Americans. They used to live all across the riverbed right here. It's an unbelievable piece of history. But so we'll go back to that commenter. And again, this may seem like basic info, but the vast majority of the public doesn't really understand this. So let's say if you buy a house, right? The house is $100,000, you put $25,000 down, and you're taking out a mortgage for the rest, right? Let's say if you're getting a 30-year fixed rate mortgage. Your payment is going to remain the same for the 30 years, but the first couple of years, it's mainly the first 5 years, the vast majority of your payment is really only going towards your interest. Very, very small amount, a very small amount of your monthly payment is going towards your principal. So the principal is essentially what helps you build equity in your property. So as you're making those monthly payments every month, that's why many experts say, and many financial advisors will say, if you can make double payments on your mortgage for the first couple of years, you know, that'll help you build equity in your property, and it'll help you avoid paying a ridiculous amount in interest. So if you're a first-time home buyer, or maybe you didn't really even know about this, look at your amortization schedule. I think, well, I would hope, I'm assuming that this is a regulation. When a bank writes the loan, they have to send you your amortization schedule. And it'll show you your first payment, how much goes towards your interest, your second payment, how much goes towards the interest and the principal and the like. So if you can, try to make double payments for the first couple of years, because that could save you literally thousands of dollars in interest payments over the course of your mortgage. So pretty interesting stuff. Yeah, Evan Weeks. So Evan Weeks says the site dates back to 500 to 600 BC. So Babylonian period in the Middle East, definitely not the oldest site in the world. I think it's the oldest site in the United States, right? At least the oldest people that we've discovered so far, but it's super fascinating. Super fascinating. CPQ Trainer says, hey Tom, as you probably have heard, the area has a new name. I do not know. I did not know about that. CPQ Trainer, I did not know about that. Adrian is here, says hello Tom and team, welcome. Jay Sully says, hey Tom and chat, what are your thoughts on China, Russia, Brazil, etc. moving away from the petrodollar? Yeah, I mean, there's been a lot of, I would say, fear about that in the marketplace. But here's sort of my opinion on that. This is a really nice view of the W Hotel and Tower. We'll actually head back because it's going to be a short stream. I got to wake up extremely early tomorrow. Apologize for the wind noise. But there's many people that have been saying that, you know, the US dollar is going to lose its reserve status as the world's reserve currency. And I disagree with that, respectfully. I do disagree with that. And I was talking to my friend about this, and here's the question that I asked my friend. Because if you think about fiat currency, right? Every single currency that exists today, pretty much, is a fiat currency, unless you're, you know, buying gold. I guess you can consider gold a currency, commodity, precious metal. Which, if somebody came to you and said, you could either have $100,000, but you have to hold on to that $100,000 for 5 years in US dollars, or you can convert your $100,000 into any other currency in the equivalency of $100,000 and hold it for 5 years. What would you take? And I think you have to ask that to yourself. And I think the answer is pretty obvious, right? Do I want 100,000 US dollars equivalent worth of Russian rubles, right? Or any other foreign currency? I'm assuming, think about it like this. If you go to any country, right? Any developing country, and you ask somebody that question, would you rather have $100,000 equivalency of Russian rubles or $100,000 equivalency of US dollars? I could almost guarantee, and maybe some of you would disagree, but I think the vast majority of people would say, I'm going to take the US dollars, right? And the reason why I give that example, everybody, is because fiat currency in and of itself is built on one thing and one thing only, and it is the trust and belief in that specific currency. So I don't know, what do you guys think? Also, I was reading some articles where you know, some of the authors, I'm trying to shield you guys from the wind noise as much as possible, but I don't think it's going to be possible. Many people were saying that, you know, more countries are going to choose to transact in Russia's currency. Well, here's what I challenge you to do. I would say look up the percentage of transactions every year that happen in Russian rubles. And you'll find that it is such a small portion of global economic output. So look, anything's possible, but I really don't think that the US dollar would ever lose its reserve currency. And if it was really a threat that the US was going to lose its status as the world reserve currency, I think we would know it. And what I mean by I think we would know it is there would probably be a massive military war outbreak. Let's just say that, in my view. Evan Weeks says, who the heck would choose the ruble over the dollar unless you're under the thumb of Putin or allies? Yeah, and I mean, I'm just using that as an example. And you could substitute the Russian ruble with any other currency, right? I just think that, again, I think the point I'm trying to make is fiat currency, all of it is nonsense, right? I think we could all agree there that fiat currency is nonsense and garbage. But the least nonsensical garbage fiat currency there is the US dollar. That is like the least laughable fiat currency. All right, let's try to get off this river walk here because it's a little bit too windy for you guys. I forgot my microphone at home. I do apologize. But check this out. This yacht has a little dinghy boat on the bottom. Ryan Beck says, Tom, did you start your position in gold yet? Yeah, so let's talk about gold. I'm bullish on gold, but I do not own any gold. So if you guys follow me on Twitter, I actually ran a Twitter poll. If you follow @WalksWallStreet. Now, this is very anecdotal, but there was about 100 respondents to the poll. This is the valet at the at the Epic Hotel and Residences. It's pretty busy for a Thursday night. But I did a poll on Twitter, and I said, I've been talking with a lot of my friends, and some of my friends are, manage pretty significant amounts of money for clients, and almost none of them have exposure to gold, at least not yet. So I asked the audience, I said, how many of you have exposure to gold? And over 60% of people have no exposure whatsoever to gold. I think there was about 10% of people who said, I'm thinking about getting exposure to gold, and then the rest have exposure. So here's my point. You have a precious metal, such as gold, trading near all-time record highs. Now, in other currencies, yes, it is true, gold is actually at a brand new all-time record highs in other currencies, but I think in US dollars, we're still like, what, 70 bucks off or like 20 bucks off, something like that? I think as of today's close, gold, an ounce of gold is what, 2,020 bucks, something like that? So you have gold that is emerging out of a 14-year base. If you have tradingview.com or your Bloomberg Terminal Up or MarketSmith, pull up a chart of gold on a monthly time frame. We hit the all-time record high in 2011. Okay? We've traded sideways for over 12 years. And you have the precious metal trading near all-time record highs, with almost every single market participant extremely underweight gold and lacking exposure. So what I'm saying is, if we do crack into all-time record high territory, the measured move on this could be just ridiculous. So no, I don't have a position in gold, but If we crack into new all-time record highs, I'll probably have to buy some, and depending on if the volume comes in, it's probably going to be a very significant portion of my account. Real quick, for all of those who are new to the Miami streams, you are looking at the Miami Tower, or the City National Bank building. Very unique building, very Miami. And this is the Wells Fargo Center and the JW Marriott Marquis. But I don't know, I thought it was interesting. Thought it was very interesting. Hey, Teresa Diaz, thank you so much. TD, thank you so much for your very kind $5 donations. This Walks from Wall Street team, we missed you guys, indeed. Again, do apologize. It's just been very, very hectic. Work has been really, really ramping up. But I have a lot of exciting things brewing, which I will keep you guys apprised of. But for now, let's walk over to Brickell. But TD, thank you so much. So the last thing I'll say about gold, I was talking to one of my friends, and he has a friend who is a very notable bullion dealer. And for whatever reason right now, it is very, very difficult to get your hands, or I should say receive physical gold right now. So if anybody is in the precious metals business, maybe if you can provide some insight or context on that, why is physical gold almost impossible to get your hands on right now? It's going to be very windy up here, just forewarning. So I don't know, it seems like all of the stars are aligning, right? The fundamentals present itself for gold to go on a pretty big run. Now maybe it won't, we'll see. It's failed to break out multiple times, but you know, you have banks collapsing, you have the threat of wars. So it's very possible gold could break out. Look up the gold confiscation of 1933 executive order. So I think it was the 1 year anniversary of that yesterday, wasn't it? Was it not? I think it yesterday was the 1 year anniversary of the gold confiscation, where the United States government literally forced all Americans to turn in their physical gold. I think yesterday was the 1 year anniversary of that, I believe. Or the anniversary of that, not 1 year. So this is the Aston Martin building. It is almost complete. This is going to look amazing on the downtown Miami skyline. It's going to look unreal. I'm just browsing through the comments here. Hey, Mighty Bull's here. Bree Graham's good to see you. Al Baker says, how would you get exposure? I mean, for me, I would probably just buy the futures or the ETF, like GLD. But yeah, I mean, I don't have a position in gold now. Oops, excuse me. But again, if we do break into all-time record high territory, I'll probably have to get in there. We'll see. Now, we have so many things to cover, but I got to end the stream short tonight. But let's talk about interest rates for a moment, because interest rates are so important. Actually, let's talk about one thing before we talk about the bond market. Does anybody remember when the market was trading pretty much near all-time record highs? So you could say about a year ago, maybe a little bit over a year ago in February. And I said there's something very interesting happening. You had both the NASDAQ, the S&P 500, and the Dow Jones Industrial Average all trading at or near all-time record highs. But if you looked under the hood of the market, and what I mean by under the hood of the market is the vast majority of individual stocks. Now, a good way to gauge the overall breadth of the market is by looking at the advanced decline line. So the advanced decline line will give you a ratio of stocks advancing in the market to stocks making new lows. So again, as we talk about the S&P 500, the NASDAQ, and the Dow Jones Industrial Average, well, not the Dow Jones, but the S&P and the NASDAQ, these are market capitalization weighted indices, right? The S&P 500, it is weighted by market cap. So when we were back in New York, when we were doing the Upper East Side stream, I said, look at the weightings of the top 10 stocks in the S&P. And I think for the first time in history, and you guys could fact check me on this in real time, if you go to slickcharts.com, I think Apple now makes up over 7% of the entire S&P 500. Microsoft makes up about 6%. And I think Alphabet also makes up about 6%. Then Meta and the like. So you have 10 stocks making up about 30% of the weighting in the entire index, which is insane. And if you look at the stock market performance right now, yes, all of the big mega cap tech stocks are performing really well, like Microsoft, Apple, and the like. But take a look at a lot of the individual stocks in the Russell 2000, right? Take a look at a lot of the individual stocks in the S&P or in the NASDAQ 100. These things are still getting pounded, right? Look at any growth stock that has a higher than average beta, right? So beta is essentially if the S&P 500 moves 1%, what is the difference in the move to like an individual stock like Datadog or, Atlassian? So if the S&P is up, 1%, Datadog and Atlassian are probably going to be up 3 or 4%, maybe 5%, right? Because it has a higher beta. All of those type of stocks are getting creamed yet again. So what does that tell us about the health, the actual health and the breadth of the market? It's actually deteriorating and it's pretty terrible. So if Apple, if Microsoft, if Amazon and Meta start to correct, these indices could unwind in a really, really stark kind of crazy way. But to be fair, there's a lot of people out tonight. To be fair, the S&P 500 and the NASDAQ are both trading above their 50 and 200-day moving averages. And that is something we cannot deny. We'll walk down a little bit more and then I gotta cut the stream short tonight, unfortunately. Ron McAllister's AI stocks have been insane the past 2 days. I think that's going to be, Ron McAllister makes a good point. Everybody now is talking about, artificial intelligence. It's sort of like this big hype. Now, I do think that AI is going to be huge. I think it's going to fundamentally change the world. But in every major hype cycle, you have price action and valuation getting a little bit ahead of itself. The building we're looking at right here, guys, is Bank of America Tower. So what I think is going to happen, and this reminds me much of like what happened with the marijuana, weed, penny stocks back in 2000 and I think it was 2018, 2019. Everybody thought every single marijuana stock was going to be the next big thing. They went up thousands of percent, and then the vast majority of them went to zero. I think it's going to be similar to this. In my view, if you want to get exposure to, AI, I think you could probably just buy Microsoft, buy Alphabet, but not giving advice. But yeah, a lot of those stocks have been really going on a tear here. But look, we need to pay attention to the deteriorating breadth of the market, right? So again, that is a very useful tool. Go to slickcharts.com, and it breaks down the S&P 500 and the NASDAQ 100 by weighting. And what you'll see is, I think for the first time, Apple is almost 8% of the index. I think 7.5%. So to me, what that shows is a lot of institutional investors are using the big mega caps as a massive flight to safety, right? Not necessarily buying Apple for, the explosive earnings growth, but they're just buying it as a way to hide out, because a lot of these big mega cap companies have rock solid balance sheets. So until we could see some of the smaller caps getting gear, I don't know, I'm a little bit skeptical about the rally, but we'll see. Hey, Blues Rider says you can't mine gold with a computer or actually hold it in your hands and make something beautiful with it. There's a reason it's been around and will be for a long time, something primal about it. I agree. Magnolia says, hey Tom, do you see a strong Russian presence in Miami, or is that overspoken of? Well, there is a particular neighborhood in Miami which is called Sunny Isles Beach. And I think the nickname for it is actually Little Russia. So there's a big Russian community that lives in Sunny Isles Beach. But I wouldn't say it's like, all of Miami is Russians. I think Miami is a very diverse place, just like New York, just like many parts of many big cities. But yeah, if you've ever been to Sunny Isles Beach, Florida, which actually has a little bit of a nickname as well of being the Billionaires Row of Southern Florida, because you have some of the most notable buildings and most notable new developments. I think if you go to my Twitter page, I actually took a video of some of the buildings there in Sunny Isles Beach, if you follow Walks Wall Street. But you have the Ritz-Carlton Residences there, which is just gorgeous, gorgeous piece of property right on Sunny Isles Beach. You also have the Porsche Design Tower. And then I think the Bentley Design Tower is also under construction now, or maybe it's going to be under construction, but that's also going to be in Sunny Isles Beach, which is very, very big Russian community here in Miami, Florida. Hey, Deborah S. says Miami is a foreign city. The question is are any American really there? I don't understand the question. I'm here, I'm an American. Hey, Texas 05, good to see you. Says Amigo, it's been a while, hope you're well. Thank you so much, 05. Two Wheel Freedom says, I think the marijuana stock back then were turned into pump and dump style. Yeah, a lot of those companies were fraudulent as well. Hey, Gregory says, the Aston Martin Tower lit up yet? Not yet, not yet. But I'm excited about it. Hollywood Bob says, Google Mary Brickell and see what it looked like 100 years ago and read how it all started. Hollywood Bob, good to see you. Now, I think the last thing we're going to talk about tonight, because we got to unfortunately cut the stream short, is we got to talk about interest rates. So if you go to cnbc.com/bonds, again, cnbc.com/bonds, you'll be able to see the yield curve. So you have a point of reference for what we're going to talk about. I think this is one of the oldest bars in the United States. right here in Brickell. This is the major Brickell city center where they also have a WeWork office where I work out of sometimes. Really, really beautiful place. They also call this mini Manhattan. So this is sort of like Miami's Manhattan, if you will, right here in Mary Brickell Village and Brickell City Center. So here's what I would say. If you look at the 10-year U.S. Treasury yield, we continue to sell off in terms of the yield, right? So if you remember how, or I should say, if you remember the relationship between bond prices and bond yields, as the prices of bonds are getting bid up, the yields fall. What's up? If you think about the relationship between bond prices and bond yields, as bond prices are selling off, yields spike. But as bonds are getting bid up, yields will naturally fall. Take a look at where that 10-year U.S. Treasury yield is now. We're almost under 3%, which is just an unbelievable move. Which, if you think about, just sort of veer off topic for a minute, if you think about the Silicon Valley Bank catastrophe or calamity, this is actually kind of helping some of these banks who are significantly underwater on a lot of their bond holdings. Because you got to understand, the reason why that's a major problem, right, is because many of these banks and institutions are holding mortgage-backed securities and other treasuries that they purchased when interest rates were extremely, extremely low, right? So right before Silicon Valley Bank collapsed, you had the 10-year U.S. Treasury yield well over 4%, and you had a 1-year U.S. Treasury at 5.25%. So think about that for a moment. So Silicon Valley Bank was forced to sell the majority, I should say some of their mortgage-backed security portfolio when interest rates were extremely, extremely high. That means the realized value of those bonds have deteriorated significantly. So this, now that rates are coming down a little bit, funny enough, that's actually kind of helping the situation, interestingly enough. Now, I think that where this could get a little bit interesting and a little bit crazy is as it relates to the housing market. So just as people finally thought, this is Lucid Motors across the street, just as people finally thought and started to see a lot of the prices in the housing market finally start to decline because interest rates have been going skyward, right? If you think just about a month ago, the average 30-year fixed rate mortgage was 7.25%, right? I think we're now well below 6.5% on an average 30-year fix. It's a significant move. So I think this may spark some buying activity in the housing market and unfortunately start to bid up the prices again. So we'll see. We'll see. Hey, Line Sync is here. Good to see you. This is South Miami Avenue as we head into Mary Brickell Village. Hey, Bree Graham says, I've never been to Miami. You should visit. I would say now is probably the last few months where it's going to be really, really the opportune time to visit Miami, mainly because after, usually May, Labor Day, or I would say Memorial Day, it gets very, very humid here. Now, I don't mind the humidity, but many people do. So just as a forewarning, it gets very, very humid here in Miami, especially in the summer. Michael Joseph says, Tom, the jobs report may be overcounted because of multiple duplicate job positionings for every state for remote work. I read about that too. I read about that as well. Now, it depends. Do you really think that's gonna, well, I'll rephrase it like this actually. Do you think there was enough double counted jobs for it to make a material impact in the numbers. I don't know. I don't know. I'm gonna give that a maybe. Could be, but I think we've yet to see the data. Hey, Justin S. So I'm headed to Florida for 2 weeks. Very nice. This is the SLS Lux Tower here. Kurt Flirt says Lucid really disappointed me. I thought it'd be a lot better. I don't know, I've never been in one. I'm just trying to scroll through the comments here. All right, we'll go up to the Moxies, and then I gotta turn around. But I think the most important piece of economic data that came out this week, obviously being the first week of the month, is the Institute for Supply Management PMI numbers. Now, we're gonna do a dedicated live stream talking about the PMIs, but I will give you guys a little bit of an insight into it, which was the most, I would say, concerning point for me. And it's that new orders really declined and fell off a cliff. So if you go to the Institute for Supply Management's website, and you look at the report, so the latest ISM PMI report, the most glaring concern for me is that new orders continue to decline and continue to deteriorate. So if we can use, or if we could assume that we could use the ISM PMIs as a leading economic indicator, and if a leading economic indicator is showing us that about 20% of, I would say, the economic engine in the United States is in continuous deceleration, particularly as it relates to new orders. Well, what can we infer about potential GDP growth in the next coming quarters? We'll go into that in more detail. I think since we haven't been streaming as much as we wanted to, I'm gonna be posting some more of the in-depth content on my Twitter, just to make up for some of the lost time, so we could really consolidate the topics here. So if you want to follow us there, it's at Walks Wall Street on Twitter. But the PMIs are very critical, very important to understand and interpret correctly. Seems to be a lot of people out for a Thursday. Oh yeah, I totally forgot. So everybody, tomorrow is Good Friday. So it is a bank holiday, so the stock market will be closed. So today was the official last trading day of the week. So I'm assuming the vast majority of you have off, maybe some of you don't. But we probably won't be streaming live tomorrow. Good Friday for all of those who, you know, if you're religious or Catholic or whatever, you're really not supposed to do much on Good Friday, so we probably won't be live. Just wanted to let you guys know, and there'll be no trading, so stock market is closed tomorrow for Good Friday. Michael Joseph says rolling recession is the new predictions. Interesting. Michael Joseph says when you walk through Miami, it looks like there's no rolling recession. Yeah, I mean, it's really interesting, right? So Michael Joseph makes a really good point. Now, all of the major, I would say, mainstream financial channels, right, like Bloomberg, CNBC, and the like, always have been forecasting this economic calamity, this economic collapse and economic catastrophe. But, you know, think about what Peter Lynch said, right? So for those of you who are unfamiliar with Peter Lynch, he used to be the portfolio manager of Fidelity's Magellan Fund. And one of the things he would say the most is it's very important to do your own market research, right? Go to the mall, follow around your kids, ask your husband, ask your wife what they're into, what they're buying, and just notice human behavior. So as we do these live streams in New York City and Miami, what do you guys notice? Almost every single night when we're in New York City or Manhattan or Miami, the restaurants, the bars, the hotels are absolutely packed and absolutely mobbed. I mean, look here for yourself. This is Mary Brickell Village on a Thursday night, the Thursday before Good Friday. The restaurant seems like it doesn't have an open table available outside. People are out spending money. People are out, people are out. Now, I would like to sort of wrap that back into stock talk because I want everybody to take a look at LVMH. So LVMH trades over the counter, obviously, here in the US. So it's an ADR, or an American Depository Receipt. But LVMH Moët Hennessy, I believe, is still trading near all-time record highs. I think it pulled back a little bit today. But the stock has been so ridiculously resilient. Now, LVMH Moët Hennessy is a company that specializes in multiple luxury brands, right? I'm not a big luxury guy, not too well read up on the luxury stuff. But if you look at the different sectors of the market, right? If you want to break the market down by sector, so you talk about energy, oil and gas, financials, luxury, travel, hospitality, consumer staples, and so on, you're seeing extreme strength in the luxury market. Take a look at LVMH. Also for some of the higher end hotels, right? Take a look at Hyatt, ticker symbol H. Hyatt, particularly in New York, some of these hotel rooms can go for upwards of $500 per night. Oh, look at all these dogs in this thing. Look at that. Oh my God. What are those guys? Is that English bulldogs or something like that? They look like English bulldogs, I think, right? Ratfinks says yes, English bulldog puppies. Those are awesome, those guys. But yeah, I think it's interesting, right? Because you have this very bifurcated market. For example, the way I like to explain it is, I think over the last 14 years, the Federal Reserve has done a really good job with creating what I like to call a two-tier society, where you have the extreme haves and the extreme have-nots. So the middle class and the lower class are really, really struggling, while the top 5% of Americans, or even I would probably extend that globally, are doing fantastic, right? The wealthy have never been more well off ever in history. And I think that's showing in consumer spending habits. It's showing in the luxury market, in stocks like LVMH, in stocks like Hyatt, and some of the other luxury good makers. Particularly, here's another good leading economic indicator. I want to give somebody a quick shout out here. I always forget his Twitter handle, but I think the Twitter handle is called The Dealership Guy. Now, it's this anonymous character on Twitter who owns multiple car dealerships throughout the United States. And he's very well connected in the industry. And he was saying, he made a big thread on Twitter, that Rolls-Royce, on their new models that are coming out, have completely sold out. They're all accounted for. Same thing with Ferrari and some of the other higher end EV makers. So what does that really tell you about the health of the top, I would just say maybe 5 to 10% of Americans? I think there is an extreme bull market still in luxury, and that may be, a little bit of a factor. Speaking of Ferrari, I think this is a Ferrari right here. That may be a little bit of a factor what's driving the price of gold, potentially. I think it's a little bit to do with it, but... Hey, Dan Zhang says, Tom, I think you should do your stream and walking dogs at the same time. Yeah. I'm not too sure what that guy was doing. Maybe he was trying to sell them? I don't know. I think that's what I heard. If you guys are ever in Miami, this is a really, really good place. It's actually an Argentine restaurant. Really good place to take clients. I've been here many times. Really good food. It's right here on the main strip in Mary Brickell Village, or I would just say Brickell altogether. And again, this restaurant is pretty packed. Hey, Mike C, what's up? Good to see you, Mike. Someone says putting cash somewhere else other than banks. T-bills, treasury bills. Now, do we think that's also a potential other catalyst as to why bond yields are dropping so much? Did this banking, I would say, debacle cause so much fear and panic that you're seeing a massive amount of outflows from regional banks specifically, right? Also into some of the top 5 banks in the US, but I wouldn't be surprised if a lot of people just sort of threw their hands up in the air and said, look, I don't want to leave my money in a bank, specifically a regional bank. I'm just going to go to Treasury Direct and at least get a little bit of yield on my money. Now, if you do that now, it's not going to be as much yield as you would have gotten, let's say 3 weeks ago. We were talking about how the 1-year Treasury yield was yielding over 5%. It was at 5.25%, right? Think about that. Risk-free rate of return of over 5% for buying a treasury for 1 year. I mean, you really can't compete with that. I think that was another catalyst of what sparked, you know, these big outflows of banks, because why would you leave your capital in a checking account or in a savings account where the banks, Jamie Dimon's not going to pay you anything on it? Why not just go to the federal government, the Treasury, and make an attractive rate of return? So maybe that's another reason why yields are going down a little bit. Gary Carpenter says Bank of America is a big joke. So that's Brian Moynihan's company. He is the CEO of Bank of America. Yeah, Tim sees the CDs at Fidelity are just under 5%. Good to see you, Tim. All right, I gotta head back to downtown Miami. I gotta get the scooter home. Now, tomorrow is gonna be a busy day, but it's Good Friday, the market's gonna be closed. But I do have to go to Fort Lauderdale. I have to be there very early in the morning. I have to be there at 8 o'clock. So that means I probably have to leave my house at around maybe 7. And then, in about a week and a half from today, we will be back in New York. But it's been really refreshing to be back in Miami. I will tell you guys that. Almost every single day, it's been sunny, literally bright sun, not a cloud in the sky. 86 degrees almost every single day. And it's been awesome. Now, although a lot of my buddies were texting me today that in Manhattan it was 76 degrees. And 76 degrees in Manhattan feels like 86. So I think spring is finally here. Looking forward to the summer, but here in Miami, it's pretty much summer every single day. Yeah, Michael Joseph says Tom was 80 degrees in New York City today. That's awesome. Look, I'm excited for the summer. I'm excited for it. Hey, Elizabeth Gill is here. What's up, Elizabeth? Yeah, I really enjoy being in Miami because the commute, my favorite thing about being down here is my commute. Because the way I get to downtown Miami, I actually take the long way around. Hey, Ratfink, thank you so much for your very kind $5 donation. I appreciate you very much. Thank you for supporting the stream. Now, one of the ways that I get to downtown Miami, I take the long way around. So I come down through Bal Harbor, and I'm not sure if there's any boaters in the chat, but the Haulover Inlet is supposedly one of the most famous places for boaters, right? Because I don't really know how to explain it, but if you want to watch some crazy videos, just punch in on YouTube Haulover Inlet. There are these massive, massive waves, and a lot of boaters come from all over the world just to see if they can, you know, take their boats through there. But anyway, so I take the Vespa over Haulover Inlet, right, over that bridge that brings you into Bal Harbor, which is another amazing neighborhood, amazing community in Miami. Then you go right through Surfside, which is one of my personal favorite towns. Then you go through North Beach. I go through South Beach over the bridge into downtown Miami. Now that's the long way, but if you're on a scooter, there's really no traffic, right? Because you could just sort of ride alongside the cars and the vehicles there. But on Saturday, we should be live for the full 2 hours. Saturday is usually a day where we don't talk about the financial markets. But I think that's going to be the day where we do an in-depth review of the Institute for Supply Management PMI numbers. I think that's going to be so critical. I'll also share some research with you guys. I received an interesting research report as it relates to the precious metals market. So we'll go through that a little bit. We'll talk a little bit more about the breadth of the market, and then we'll talk about some earnings projections, okay? So we'll talk about the S&P 500 on a valuation basis from a PE standpoint and a forward PE standpoint. And we'll sort of compare that to historical norms. Because this bear market is getting a little bit long in the tooth, it is. So I think we need to be well aware that this could last for, well, we'll save that for Saturday. It's gonna be a good conversation. In the meantime, guys, we do now have the Substack up. So I think if you type !news, NEWS, in the chat, the Nightbot will drop the link to our Substack, where you can click the link, punch in your email, sign up for the newsletter. If you want to follow us on Twitter, you can follow @WalksWallStreet. Subscribe to the channel if you are new. We do these live streams about 7 days a week when I'm not busy at work, between New York City and Miami, talking about the financial markets. But it was good to see you guys again. Thank you guys so much for being here tonight, and we will probably see you on Saturday. So Austin City Limits, thank you so much. Nigel, Gill, Kirby, appreciate it. Magnolia, thanks so much. Hollywood Bob, that is true. This is Easter Sunday weekend, so it's probably gonna get a little bit crazy. Well, I'll see you guys when I see you. Tomorrow we're probably not gonna have a live stream because it's Good Friday. I'll keep you guys apprised. JP, thank you so much. Kurt Flirt, appreciate it, sir. Two Wheel Freedom, Teresa Diaz, Joe Driver, Steph UH, Dusty Cole. Guys, have a restful, beautiful weekend. God bless you all. And to the Mighty Bull, have a good night wherever you are, because there is always a bull market somewhere. You just need to know where to look. Everybody be safe. Have a great weekend. Have a great holiday. Happy Easter to you and your families. And maybe I'll see you Saturday or Monday. We'll keep tabs up in the air. Thanks, guys. Appreciate it.